this workshop. I would like to thank Senator Deacon and Wetston for your collaboration in organizing today's session. Malheureusement, la traduction simultanée n'est pas disponible pour cette séance et nous en sommes désolés. Nous vous encourageons tout de même à poser vos questions dans la langue officielle de votre choix. Unfortunately, simultaneous translation is not available for this session. We apologize and encourage you to ask your questions in the official language of your choice. Please note that this session will be recorded and posted on social media. Please be mindful to mute your mics and hide your cameras while you are not speaking, and indicate your intention to ask a question in the chat. The purpose of today's session is to help us better understand the perspective of banks and credit unions as to the financial services and accommodation that they are offering to small businesses and organizations during COVID-19. Our experts will discuss obstacles and challenges encountered in their respective areas. Mainly, what's working in terms of the government programs, what is not working and who's not getting help from those programs, and where do they see the greatest needs as we move towards recovery. We will begin with the presentation of our three speakers, followed by a question period. Our speakers will be speaking for a few minutes, and then we will be asking that you just post in the chat that you would like to ask a question. Our first speaker is Michael Ferencich. Mr. Ferencich is the Senior Vice President, Business Credit at Royal Bank of Canada. Our second speaker will be Mr. Henry Hahn. He's the Regional Director, Government Relations for the Canadian Credit Union Association, and he's posted in British Columbia. And lastly, Mr. Sylvain Dupuis will present on the financial co-op's perspective. Mr. Dupuis is the Senior Director, Client Segment and Offer Development at Desjardins. Thank you, and let's begin with our first speaker, Mr. Ferencich from RBC.
Hi, good morning, everyone. And again, apologies for the delay. This is the challenges of working from home. You have some technical challenges from time to time. I will start by, stating sort of the obvious that this is a crisis like no other that we have seen in certain recent memory and certain our lifetimes, and it has had a significant impact across the Canadian economy on businesses. It is our view that small business will be taking the brunt of the hit from COVID due to the almost simultaneous shutdown of most segments of the Canadian economy for a period of time, with various stages of reopening that will happen over the course of the next few months. The scale of the impact is highlighted in some of the financial numbers. RBC Economics is forecasting a drop of almost 6% in GDP average over the course of the year. Significant variability between the quarters of unprecedented numbers for the quarters of the lockdown. Same with unemployment, which has increased significantly. RBC Economics is again forecasting a yearly average of 9.5%, somewhere maybe just above 8% for year end. So the scale of the challenge that is in front of us for the Canadian economy and small businesses in general is truly unprecedented. At the RBC, and really most, or if not all, of the Canadian FIs, our response to this crisis was immediate with our own client treatment plans. So at Royal Bank, the first actions that we did were put in place support for our clients, and took in the form of deferrals of term debt, scheduled payments that were deferred. We increased liquidity lines and gave support on corporate credit cards. So just a scale of, give you some numbers. RBC has deferred principal payments on roughly 18 billion of installment debt, and that is for up to 6 months. We have provided increases in 10% increases in operating debt, which has helped around, which has been given on about $4 billion of operating lines. And in total, we have helped well over, or provided assistance to well over 45,000 of our clients. Shortly, after the client treatment plan, we started to see the government, or that the FIs provided, that we started to see the government response. First with the CEBA program, which we feel is a very successful program. And I'll talk a minute about maybe some ways that it can be improved. Follow that on by the BCAP programs, the EDC Guarantee and the BDC Colin program. But I also note there's more support coming in cooperation with the banks, a BDC mid-cap program. There was the a very successful Canadian Emergency Wage Subsidy Program, the large employer emerging finance facility, if I got that right, LEAF. That program is operational, and then of course there is the Canadian Emergency Commercial Rent Assistance Program, which we see as a valuable program. So the government's response have been broad and focusing on all areas of the business of the business community, from small business all the way up to very large corporations. So we do think it's been a very broad and comprehensive response by the government, which is going to provide a significant amount of assistance. When we look at CEBA in general, RBC as of today has processed over 148,000 CEBA loans, representing close to $6 billion in assistance for small businesses at our bank. As you may know, we are looking at expanding the program to address some of the shortcomings, which the program was initially built off a payroll eligibility test, which then left out a few businesses that perhaps paid by dividends or contractors. So this next iteration of CEBA will try to address that, and we expect to launch sometime within the next week or so. One of the great features about CEBA is the 25% forgiveness, and I think that's an important feature of the program. In our internal polling, we have found that in excess of 30% of respondents are not taking CEBA or other government help because they're concerned right now about taking on additional debt. Their cash flow prospects for the future are uncertain. The speed of opening is uncertain. What type of business environment they will find when they do reopen is uncertain. And they're very, very concerned about taking on additional debt. So that forgiveness element of it, 25% in this CEBA, in case of CEBA, is very important. And one of the comments that I have made to my partners in the Ministry of Finance who have been dealing with in the CEBA program was, for the government to consider a willingness to increase the amount of the forgivable portion of the loan, because that would certainly, I think, be the most effective way to increase the uptake in the CEBA program and also provide the most amount of significant help to businesses that are really in uncharted waters and not sure about what their future environment is going to look like. Just spend a second before I wrap up my initial comments on the BCAP programs, because I know there has been a lot of questions about uptake on those programs. While the uptake has been low, it's our view that it's early in the process. To my earlier comments, businesses are still opening up, trying to find out where their business has moved on them, where their customers, how they will respond to reopening, and what's going to be their cash flow environment. So when you look at the scope of available resources to business, first and foremost, which I have mentioned, was the support provided by the FIs that they're banking with, which many.
We have lost your, we can't hear you anymore, and it's just in the past few seconds.
It looks like he's muted his microphone, Senator.
Did you hear the comment? It seems that you have, okay.
How was that? Sorry, I didn't know I wasn't.
You had muted your microphone.
Sorry, I wasn't intending to do that. Okay. So let me, I'm not sure where I cut out. I'll start back with my comments on the BCAP programs and the uptake being a little bit on the low side. And I think that's because it's early in the process. So when you look at the resources that are available to businesses, they first have taken advantage of the support that their banks have provided to them and FIs. Then they've moved into CEBA, where there's a forgivable component to it. We do believe that there will be further uptake in the BCAP programs as we move through the reopening and the readjustment to a post COVID world, or living with COVID world, however you want to talk about it. And this was because the businesses are going to need to adjust. They're going to need to perhaps spend capital on reformatting stores or protecting employees and customers. And so those costs are a little bit unclear right now, but they will become clear over time. And that's when we expect the demand for the BCAP programs to increase. So I will stop there and turn it over to the other speakers, and ready to answer questions later in the program.
Thank you. Mr. Han?
Good morning, Honourable Senator. Thank you, Madam Chair. Thank you for the opportunity to speak with you today and to share what credit unions see as the impact of COVID-19 on our small businesses. But first, I want to share a bit about who we are. CCUA is the National Trade Association for 236 credit unions in Caisse Populaires outside Quebec, and we provide deposit, loan, and wealth management services to 5.8 million Canadians. Credit unions are local and community-driven. Here in British Columbia, we have 41 credit unions in 379 locations across the province with more than 8,400 employees. Each of our credit unions is headquartered in a town or city where they serve. Each executive, CEO, CFO, or CRO lives on the same streets as their members, and each member of their team, including the commercial lenders and underwriters, are a patron at the businesses they serve. In addition, each credit union shares the profits with their members and gives back to their communities through donations, scholarships, and local initiatives. Here in BC, approximately 40% of our residents are a credit union member and owner. This means that when a member makes a deposit in their account, they're also making a deposit in their community. Due to strong ties with their communities, credit unions are in a unique position to understand the impact of COVID-19 on local businesses and regional economies. I'll now speak to what our credit unions are seeing with respect to loan deferrals and member participation in BCAP programs, specifically CEBA and the co-lending program. Across the province, average loan deferrals province-wide are at 16.6% of total value, with 14% of retail loans deferred and 21% of commercial loans deferred. In some areas in the province, like the interior, we're seeing higher than average commercial deferrals, with up to 30% of commercial loans deferred. We believe this is the result of economies heavily concentrated in a handful of sectors, particularly agriculture and hospitality, which were heavily affected by COVID-19. CCUA was critical in advocating for all credit unions to have access to the Canada Emergency Business Account, providing much needed liquidity to our small business members in a timely fashion. The maximum of $40,000 will provide immediate relief on favorable terms for many small businesses. However, not all businesses in all sectors will be able to take full advantage of the provisions allowing businesses the opportunity for 25% loan forgiveness. In that case, the loan becomes another burden of debt on the business as it converts to a 3-year term loan at 5% interest. Under these terms, a $40,000 loan would require the SME to pay another $1,200 a month for 3 years. For these reasons, it's our understanding that CEBA applications, while robust, did not meet our members' initial forecast for take-up. Across the province, amongst our credit unions, 110,890 SMEs registered were eligible to receive CEBA. Of that amount, 43% or 47,685 were expected to apply for the program. Our data shows that only 17.8% of expected, or 7.6 of those eligible, did in fact apply. That's 8,469 approved applications. Some of our aggregate numbers indicate lower than expected uptake across the province, except for the interior, where 25% of eligible SMEs receive a loan. We also see that over the last few weeks, we've seen applications slowly trickle in, and we expect that volume to increase as CEBA is made available to sole proprietors. As we monitor each of these mechanisms for financial relief, we see trends which, when brought together with qualitative data, illuminate the challenges faced by our business community. As noted by our CEO, Martha Durden, the other component of BCAP, namely the co-lending facility, is not as popular. Some of our larger credit unions just recently began to offer the program, so we'll continue to monitor for comprehensive data, and we're happy to report back. The co-lend is aimed at larger firms and lacks the grant component of CEBA, and we've heard feedback from members that reporting requirements are onerous. Clients are not yet ready to take on more debt given the uncertainty of their sector and the overall business environment. Disproportionately impacted sectors under COVID-19 require solutions that enable these companies to manage for an extended period of time. We need to extend their runway in a manner that does not disincentivize them to walk away from their business. Just last week, I had the opportunity to speak with a member of a credit union here in Castlegar. Her name is Tana Butler of Surestay Hotel, and she has given me permission to tell her story. This is an example of the kind of small business owner we need to keep in business, as evidenced by our commercial loan deferral data for the interior. Tana acquired an older property several years ago, took out a sizable loan to renovate. They have 58 rooms, a commercial space with a restaurant and rental office space. The hotel has 4 rooms booked this week. They're running at 14% occupancy and priced well below average room nights for this time of year. Typically at this time, they would have 65% occupancy, moving to 80% occupancy over the summer months. For Tana, CEBA doesn't cover much. The wage subsidy program is helping, as they were at $16,000 a month on staffing. But some sectors have certain nuanced issues. A lot of hotels are unionized in BC. If there's work to be done, they need to bring in unionized employees. So it's not even an option for the owner-operator to take on the work themselves. For Tana, her monthly costs come to approximately $35,000 a month. When you look at deferrals, the wage subsidy, and a little bit of revenue through some room nights, there is still a significant gap on her monthly costs. Tana, like others in her sector, are apprehensive about bringing on more debt that will eventually need to be repaid. At some point, the debt burden will make the small business unviable for these SMEs. Tana's situation is not unique. Recently, the Greater Vancouver Board of Trade did a pulse check with businesses across the province and found that only 1 in 4 businesses impacted by COVID feel they are able to restart and operate profitably with the gradual easing of restrictions. The biggest challenges to restarting identified by survey respondents are, first, attracting customers or revenue for 75% of the respondents, and second, having enough operating cash for expenses for about 50% of the respondents. Given the challenges to restarting operations, over half of the members surveyed, 55%, expect it will take at least 2 months to restart. And based on what credit unions, what we're hearing from credit unions with respect to their knowledge of their businesses, we anticipate it'll take between 12 and 24 months for many sectors in our regional economies, such as hospitality, tourism, and oil and gas. This is made more complicated by the fact that many rural and regional economies in BC are dependent on only a handful of sectors, of which tourism is a key pillar. In 2017, tourism accounted for $9 billion of value added to the BC economy. As we look ahead, there'll be strategic opportunities where government can partner with SMEs to ensure resiliency of these communities. These SMEs, like Tana's, need supports and measures to incent owners and operators to continue business and provide the support to survive the abnormal business environment brought on by COVID-19. And we'll need that support to extend well into 2021 to remain viable. Thank you for the opportunity today, and I'll pass it over to our other speaker.
Thank you, Mr. Han. Monsieur Dupuis, c'est votre tour.
Merci beaucoup, Madame Moncion. Bienvenue. Je suis très heureux d'être ici. Donc, un bonjour à tout le monde. I'm very honored to be talking to you guys about the SMEs, the small business, because I've grown I'm into the financial world, but I've grown into the business world for all my life, and I've shared pains and successes of many entrepreneurs, and I think it's quite an honor to be discussing with you today. I was actually planning on highlighting only two specific elements from the presentation that you have received. The first one will be about who is Desjardins, because I think it's important to position Desjardins in terms of a player and how we can help. And also in terms of the measures that have been implemented so far, what is our position and what can we say about those, and what else can we do about them? But first, you asked questions about SMEs, but one thing I will do today is I will be talking about people. One of our leaders once said, you don't shake the hand of a business, but you shake the hand of a person. And I think it's very important to keep that in mind, that when we address all of the measures and the issues that we've raised and that have been raised during that very unique crisis, the one element that's the same all across the board is that people are affected. Businesses are affected regardless of their industries, regardless of the sector, regardless of the region, but it's all people that's been affected. So with that in mind, I want to introduce Desjardins just to give you a sense of who we are. I would like to say, first of all, the concept of a co-op. Well, Desjardins is the general leading co-op financial group in Canada with over 7 million members and over 360,000 businesses. And as many of the Canadian financial institutions, we are very proud to say that we're also part of the safest financial institution in the world. And all of that since 1900. We're actually celebrating our 120-year anniversary this year, which is quite a fact. We are very present across Quebec and Ontario with over 238 cases and also 30 financial centers. And we pride ourselves in helping small business enterprise because we reach all of these local businesses. We're very close to them. We're very embedded in their business and their local community. And that's how we think that we are the best. We are very well positioned to talk about these financial matters. But not only financial matters, actually, because I think it's important to keep in mind that businesses are managed by people. So there's all kinds of other things that affects businesses, such as HR, human resource, supply chain, the business transfers, which is one of the things I wanted to provide you as well in terms of a hindsight. And also because when we are listening and asking the right questions, we also are able to provide the right questions. So a lot of things that we'll be doing today will be asking the right questions so we'll be able to provide the right answers. Desjardins is also a people-focused democratic governance, which means that it's aligned with the interest of the entrepreneurs. Why? Because it's owned and administered by people and by its members. As I said, also, it's a very tight-knit geographical network, which fosters close relationships with SMEs and entrepreneurs and operators, both in Quebec and Ontario. Without further ado, then let's go back to the measures that have been put together. The measures that have been put together were very general in terms of it. They were very needed because they applied to all of the business, regardless of their sectors, industries, and so on and so forth. And they were needed in order to provide breathing air to the businesses to think about what's the next step. So that was really well welcome. I won't get into the specifics of each programs, as I think we want to do that later on in the presentation, but I want to provide you with some additional insights in terms of what else can be done or has been done to help those businesses. For instance, we have been very prime on the participant of the establishment of proposed measures, such as the Good Spark Fund, which actually provided with $150 million subsidized and grants to community initiatives like employment, vitality, innovation, environment, to all of the businesses that are across Quebec. The second one that we also have put in mind, put it forth, was the Momentum Fund, which is a local business accelerator, which will provide $10 million in business in funds over the next 2 years, with a maximum of $10,000 for projects to be developed, and that would not cover no more than 25% of the total project. Also, we also have a post-COVID challenge innovation. Through Google Canada and Bonjour Startup Montréal, which is an accelerator, we will find solutions to socioeconomic challenges, and we want to challenge all businesses, small and large ones. Also, through the École d'entrepreneurship de Beauce, which is a foundation which regroup many very successful entrepreneurs, we have created these virtual sessions for entrepreneurs given by entrepreneurs to entrepreneurs for situation that occurs on a daily basis, whether it's a cash flow management, whether it's HR issues, whether it's supply chain issues. And through those virtual presentation, entrepreneurs are able to exchange and get support from those. We also have through the case Solidaire Economy, which is a small case, but which really covers a population that's not really well looked at, or we don't see that many, which is the nonprofit, the co-ops, or the cultural organizations. We also provided a $1 million investment to provide for financial advising and counseling. Why? We think that because business cycles are different between one and within industries. For instance, I was talking to somebody who has a seasonal business in the forest and landscaping. This individual always starts his business around September. So right now, all of the measures that are being put forth are not really useful for him because his business has not really started. So he's very wary about what's going to happen for him in September and what can we do about it. So although all of the measures have been really, really helpful to start with to mitigate the issue of the crisis, one who also has to think about what's going to happen next in the next couple of months and how can we react to those and what programs can we put forward to help them. One issue also that has been raised is that business transfers. The other pandemic that's been hanging over our head is the business transfers, the wave of demographic changes, and the parts that will affect the businesses and the small business most specifically, and without having nobody to relieve or to get those business going. And I think this crisis has also brought up this issue a little bit more in a more astute perspective. Why? Because the entrepreneurs will have to ask their questions. Do we go through the crisis? Do we fight for it? Do we go through the changes and wait another 3-4 years before we transfer? Or do we sell right now? What do we do? And this is an issue it's even more astute at this point compared to what it was maybe 2-3 years ago. So therefore, we want to reinforce that we were present in upstream because we were present during the negotiations with the government to establish those programs. But we also need to be present downstream, as we have demonstrated. And I wanted to share you some of the examples that we have done in order to demonstrate that. Thank you.
Alors, merci Monsieur Dupuis, et puis je passe le micro à Monsieur Deacon. Colin, you're on.
Thank you, Senator Moncion, and thanks to our speakers. I'm going to be watching the chat for requests to ask questions, and I'll be responding in the order that they come in. But we'd like to start with Senator Wetston. That was a call between Senator Moncion and Senator Wetston that got this session started, and we really want to. I think all of us thank both of them for getting this going. So, Senator Wetston, if you could go with your first question, thank you.
Thank you very much. Well, I want to thank all the panelists for their presentations. They're really excellent, insightful, and very helpful. I think we all recognize the challenges we are facing. And one of the questions, a general question I would have for all three panelists, if I could, is to try and have a better understanding of the issues associated with small business. Firstly, how do you define small business? That's my first question. What's included within that category within your institutions? And that may vary. The second question I have, though, I think is perhaps a bit more significant in the sense that what you're all very accustomed to, for the most part, are commercial lending, and what we're dealing with now is emergency lending. And as we move, hopefully, transitionally from a subsidy phase into an economic stimulus phase, I'd like your comments on how you view that and what you think your collective roles will be. And that leads me to part B of that, which is eligibility criteria. it's one thing for the government to set out eligibility criteria, for example, for CEBA, and we see that occurring. It's one thing to apply those in your various institutions, but it's another thing to understand the various eligibility criteria that you develop. In other words, who do you turn down and why do you turn them down for any potential loans, either associated with CEBA or other commercial lending associated with small business? I think all three panelists might be able to take a crack at that, recognizing that you have all commented to some extent on that issue, but a bit more granular detail would be of some help. Thank you.
Perhaps you could go in the order that you spoke. That would be great. Thank you.
Yeah. Hi, this is Michael Ferencich again. So thank you for the question, Senator. I will, there was a few in there, so I'll try to answer them. And if I miss any, please let me know. So first definition of small business, at RBC, it varies depending on, program but in general, it would be exposures under $1 million. And then there's other segments in there. There's micro and everything. But if it's a general rule, exposures under 1 million would be what we're talking about in small business. As it relates to the qualification criteria, well, with CEBA, there is none. So that is and I think you said it very well, it is an emergency loan. So as long as you meet the government-defined criteria, which is very broad, you are eligible for the CEBA loan. So the decline rates there are only for people who have not met that criteria, and that's basically having an account open as of March 1st, a business account open as of March 1st, and not being delinquent. I mean, that's basically delinquent over 90 days from your loan. That's basically the criteria. When you get into the other BCAP programs, they are more like commercial loans. They do require, not exactly, but they do require a review process of the applicant. And, at RBC, our approval rates are quite high. Matter of fact, if I'm looking at the various programs, our approval rate is, above 90% in both the EDC and BDC program, and actually is 100% for commercial clients, a little bit lower than that on the small business side. And the primary reason that we see declines is because, first of all, there were problems with the business prior to COVID. So, I think what's been made clear with our BDC and EDC partners is that this is a COVID relief problem, not to solve every credit problem that may have pre-existed prior to COVID. So that's one of the reasons for declines that we are seeing. Another reason is an inability to demonstrate the repayment capacity necessary to take on this debt. So we are looking at forecasting cash flows going forward. We have looked at refining our criteria for what is an acceptable repayment. So because of the support that the BDC and EDC are providing, I can say that the risk sort of appetite or risk tolerance has expanded in terms of what our criteria is that we're looking for. However, there still are some clients that are not able to demonstrate their ability to deal with this debt in the future based upon forecast of cash flows in the post or the recovery period, and therefore that's the primary nature of the declines that we have seen, even though there hasn't been that many. I will stop there, and maybe some of the other panelists would like to answer.
Mr. Hahn?
Thanks. Similar for us, exposure under 1 million. Certainly, we have 41 credit unions here of various sizes and asset size, but we would follow similar guidelines as well, particularly for our larger credit unions, our top 10 credit unions here. With respect to CEBA, some of the challenges that we've had, we've generally had a high acceptance rate. High in the 90s. Really, where we've seen some declines was related to, members not having enough T4 salary or operating through a personal account, which we understand is going to be addressed in the next round. In fact, there's a finance webinar tomorrow for financial institutions on the rollout of the enhanced CEBA product. With respect to the co-lend and the other programs offered under BCAP, as the bulk of our membership really is focused on the small business community, we haven't seen a lot of interest in those programs. Where one of our larger credit unions here had noted when their members became aware that the program did not have a grant component, was essentially another loan, their interest had waned. It's early days here in British Columbia, as I'm sure across the country. It's very difficult for many of our small businesses here to model what their revenues are going to be with the uncertainty under COVID, whether there'll be another spike in the fall. Many that we've reached out to are in the hospitality and the tourism sector here, and really their goal is to manage through until next summer, next high season, where they'll see the revenue flows come through. Similar to agriculture, hospitality certainly here is seasonal in its nature, and the revenues that flow to those small businesses. I'll leave it at that and hand over to the next speaker.
Mr. Dupuis?
Thank you. Yes, thank you so much. I will have to concur with my colleagues that we have experienced the same situations in both programs, the same success rate. I would say where well over 95% of applicants have received those grants. As far as the small, medium-sized businesses, yeah, we do use the same qualification, like less than 1 million, although that's not perfect because in some instances, some sectors, for instance, in real estate, we don't have the same category because 1 million in real estate could be different, but in general terms, it would be the same. And as far as that's for the classification. As far as the BCAP, we're in the same position as we don't have that much experience yet, and we don't know how far this will go, but we'll definitely revert back if we have more information to address.
Thank you, Mr. Dupuis. Thank you to the speakers. I've got a question here from Senator Wu, and his question is to Mr. Ferencich. How much of the CEBA loans have gone towards servicing your customers' debts with financial institutions such as RBC, and does that amount act as an indirect subsidy to the financial institution?
So the use of proceeds is defined in the CEBA programs, and now scheduled debt payment is an eligible use of proceeds. So if you had some interest or principal payment coming due as part of your normal course of business, that is an eligible use of proceeds. What is not is simply to take the funds from CEBA to wholesale repay a loan from one of the other bank's loans. So we have not, certainly the bank has not taken CEBA loans and then transfer those to repay another bank, another bank loan, and therefore I think the comment was some sort of a subsidy. That's not the case. Now we don't track what people are doing. There's no way to, once they have the $40,000, what they're actually doing with it. They do have to attest that it's going to be used for the purposes as outlined by the program. So that's rent, that's payroll, utilities, scheduled debt payments, and I think there's insurance and a few others. So we do expect them to follow those guidelines. So to answer the question directly, there may be some instances where scheduled debt payments are being made, but there is no wholesale transfer of CEBA from sort of the government coffers to a repayment of debt at the banks.
Thank you, Mr. Ferencich. Senator Lafreda.
Yes, hi everybody. Thank you to all the panelists, and thank you, to the Senators team for organizing this very informative and good job on the presentation. The question is for Michael, and maybe the other panelists could chip in. Michael, we didn't cross paths, actually. I was a senior executive at RBC and spent so many hours with Bruce Campbell, I guess. I don't know if you know Bruce before your time. And my last 3 years was in wealth management, but I spent a lifetime in commercial lending. And Gassan Deco in Quebec and Eastern Canada still was one of my VPs for 15 years. So it hits close to home when I hear that and brings back great memories. So thank you for being here. My question, and it's not necessarily for RBC, maybe the other panelists could chip in, and it's in general in the industry. A lot of the business people are telling me, those that deal with specific industries, and are saying the banks are sending them to special accounts, the special accounts division, because, you know, one of the business people I spoke to lately says, I deal with the retail industry. They barely wanted to see my projections. They're sending me to the special accounts division, and they ask for advice, obviously. And as senators, we try to help our communities. My question and concern is, has there been a change in policy with the special accounts division? Have you seen that special accounts division grow? Do you intend on sending a lot of those customers, your customers, back to the current lending streams once the COVID crisis is over? How are you handling all that? Because obviously we know, Michael, is when we do send them to special accounts, it is the beginning of the end. And many of them, for example, the retail industry, the hospitality industry, the food industry, I can go on and on, the restaurants, are you looking at each and every account specifically, or are you saying, let's bulk the retail industry or those that deal with the retail industry, send them to special accounts, and have you increased your special accounts division? Because my concern is, if we look at the provisions for credit losses that the banks have put forward in their last quarterly reports, the amount, it's a huge number. How, and maybe you can or can't answer that, but what percentage of that number is on current loans that are current, that are operating loans that are current, that are not in default? Because provisions, right, could be two ways, right? The credit losses that are actually in default and those that are not in default. And many of those loans that are being sent to special accounts, they're current loans. They're current operating loans. What's your take on all that? Can we be surprised in 3 months and say the banks have now lowered their credit loss provisions? Because if we look at the job numbers last Friday, maybe in the US and Canada, those numbers are very positive. So are we going to have an uptick? I still believe it's going to be a long haul, but I'd like your impression, all the panelists. Like I said, I'm not just talking about RBC here. We're in touch with all our communities as senators and all the businesses across Canada at this point, and some across the world. So it's not RBC, but maybe the others could chip in and argue and keep up the great work. I hear good things, actually, that the banks are doing good work and they're listening, which I always said a good call is 80% listening. So you're listening, but I'd like your impressions on that, because I am concerned a little bit with those being sent to special accounts. Will they have a chance to survive, or will you ask just for repayment because they're in the wrong industry? Thank you.
Thank you, Senator. I will start. I do know Bruce Campbell, but in my 25 years at RBC, I spent most of my time in the corporate side. So I have just come over to the commercial side a few years ago. So, but I do know Bruce from my time in.
Well, too bad we missed each other, right? Too bad.
That's right. That's too bad. So to answer your question about special loans and our provisions, let me start by just giving you a sense of what our provisions were. So you are right. I think the big six banks combined set aside $11 billion of reserves for special loans. And the way the accounting works is there's a stage 1 and stage 2, which are provisions for actually performing loans. So the new accounting rules from IFRS 9 that were implemented a few years ago require banks to put aside money for loans that have not yet defaulted, but may, and there's very complicated models that I don't deal with, but very complicated models to figure out what those numbers are. And that was and those are called the stage 1, stage 2 provisions. And those where this $11 billion came from. The stage 3 provisions are actual losses. That's where you move a file from 1 to 2 and then into 3, and then you actually work that. And if there's any losses taken, you do take those losses, and then you compare that to what you have provisioned when that file was in stage 1, stage 2. And if it's higher, your losses are higher than what you thought, then you take more of a hit. If they're less, then you can release those provisions. So to answer your specific question about, will we outperform? My goal is to outperform. Yes, my business took, of RBC's total, my business took $600 million of those provisions that were announced last quarter. I am determined to beat that number, to do better than that number, so that our losses are not $600 million. And I do not work in special loans, but I will tell you what a special loans person will say is that they hope it's not the beginning of the end, that we really look at it as a rehabilitation space, and it actually is viewed as a success when we can take a loan from special accounts and move it back into the commercial account, that we deal with the problems, and the special loan staff that are there have certain skill sets to help businesses that are struggling to get them back up on their feet and then return them to our normal business, if you will. As it relates to how many are going, right now we haven't spent that many. Matter of fact, our stage 3
Mr. Ferencich, I think if you could turn off your video, the audio might be a little stronger, because you are breaking up a little bit.
Okay, I will do that. How was this?
Okay. I'm sure it'll be better. Thank you.
Okay. Sorry, let me make sure I got my microphone close. So the stage 3 provisions are actually quite good. We haven't sent a lot of files right now to special loans, but we are preparing for that. I think we would not be truthful with ourselves if we didn't feel that a significant number of businesses will not survive this crisis, even with the extraordinary amount of support that the government and the FIs themselves are providing. So over the course of the next few quarters, we do expect an increased amount of files to be transferred to special loans. We are looking to increase staffing for those areas, but we haven't done that just yet. So right now we are in a little bit of a holding pattern while we let this crisis play out. When I talked about the client treatment plan that RBC provided, which really allowed almost anybody to defer their payments, there really hasn't been a lot of potential to default on your loans. So we have been providing an extraordinary amount of support for clients. And then you have the CEBA and the BCAP and the other programs. So we really do see the actual, businesses hitting the wall not really coming for a couple more quarters. And we will deal with them, and we will try to rehabilitate them to the best of our ability. But given the extraordinary GDP numbers and unemployment numbers, it would be incorrect to say that there's not going to be a significant number of bankruptcies through this crisis. This is an unprecedented crisis, and we need to be prepared for that.
Well, I'm glad that the policy hasn't changed, that you do want to readapt the clients and send them back to the regular lending streams, because that was always the policy historically, and I'm glad that hasn't changed. So I wish you success in doing that, because we need you for our economy, and we need those clients to get back into the regular lending streams. So I will comfort those that are being sent to special loans and the ones we do hear of. And like I said, all institutions, not just RBC. So thank you for that. If the other panelists want to chip in, feel free if there's anything.
Yeah, actually, if I could, this is Sylvain Dupuis speaking. Thank you for the opportunity. I really enjoyed your question, Senator Lafreda, which, by the way, we did our path crossed a couple of years ago while I was at Desjardins and you were at the Royal Bank. So brings back memories, actually.
Yes, of
so
course.
For me, it's nice.
So it's always great to see you, and always great to brings back great memories. And thank you. You're doing a great job too. Thank you very much.
Thank you. So that question is really good, because going back to what our purpose is to help businesses grow, it's also very important to find the right balance between risk and support. Clearly, banks have and all financial institutions have to mitigate the risk in general terms, but also we have to bring in the support. And I'm very happy to say that special accounts, as we call them, have been involved in a global understanding of the issues with the people from the financial commercial activities. Why? Because we believe that by helping and supporting those businesses through the tough times, that we're going to be able to support them after the time. And that's when we will find the right support and how we will make sure that these companies grow. So for instance, what we do know is that if businesses were going well before the pandemic, we know that these guys, those businesses will have some issues right now. We look at their activities and we say, okay, what is going on in the sector, obviously, and what's going on with them, those specific industries, and we adapt our structure to make sure that we help them during that time. Clearly, if a business was having some tough times before the crisis, and the situation continues, obviously we're going to have an issue. But it's very important to understand the posture of the business prior to the situation. Also, we also know that, and it applies to all kinds of sectors and activities. It's nobody wins if businesses go bankrupt or goes belly up or having some issues. So clearly, our objective is to really go back to what I was saying at the beginning, is that in terms of supporting our businesses, leveraging their knowledge, providing with counseling and support will help them and will mitigate the provisions that we have to know to put down. I don't have the figures and I don't know how those provisions have been taken at Desjardins, but one thing I do know is that we want to make sure we support them through the tough times, because this is a very unique situation. And frankly, this situation might not go away until a long time. So we need to adjust our posture right away in order to help them. Thank you.
Well, thank you. Thank you for the answer. And if anybody else wants to chip in, but one thing I do ask quickly is, what I'm hearing is a lot of times, a lot of these small businesses, the banks, and I agree, send them to special loans, rehabilitate them, send them back, even though I believe at times, in my era, at times, we've lived through tough times. Sometimes it was the beginning of the end. But, rehabilitate them, send them back. Great. The only thing is, a lot of them are saying the banks are now requesting consultant reports. And a lot of them are not able to take salaries. They've laid off workers. They're having difficult times. And they're saying now the bank wants to send me to special loans, wants me to hire a consultant at my expense. We can't afford that. What should we do? And, so I'd say maybe if you can find some alternative solutions from a humble 35-year banker, if you can find some solutions besides sending them to a consulting firm, which if they dream about them at night, they're going to build them. I think it would be a great alternative for a lot of these small businesses that are in difficulty and are being sent or will be sent to special loans. That's my take for the day, and sorry for taking so much time. But
if I can, thanks, Senator Lafreda and Mr. Hahn, please. Yeah,
if I could just quickly chime in. So most of our members here, we don't have the size and scale of an RBC. We don't have a special accounts team. What we've done is we've reallocated staff to the lending departments. We've deferred $7.8 billion in total in retail loans and $4.5 billion in commercial loans. The majority of our members here, I would say more than 50% of our credit unions. I'm sure the special accounts team at RBC, the FTE count there exceeds the total staff of those credit unions. We have much more of an intimate relationship, particularly our regional community credit unions. They're dealing with those small businesses on a case-by-case basis. And in fact, Senator Lafreda talked about a more of a personal and intimate approach. Certainly, I think that's the credit union advantage and difference maker that we're seeing. In terms of some of the challenges, certainly, one of the communities here, Salmon Arm, the local credit union there banks 50% of the small businesses in that community. 9 out of the 11 hotels hold a mortgage with that credit union. The credit union is not in the business of running hotels. They certainly don't want to see the keys to those hotels a year from now. And really working with those members on the business viability as well as the debt burden, the increasing debt burden that they're dealing with. We recently presented to the BC Finance Committee here on budget consultations for next fiscal, and had provided a number of potential measures that would be much more surgical, oriented to specific sectors, and specifically to strategic communities and regions where really the possibility of having a sector fail would be catastrophic to that economy.
Thank you, Mr. Hahn. That was very interesting all around. Thank you to all the speakers. We have Senator Coyle, followed by Senator Ferencich.
Thank you very much, Colin, Lucie, and Howard, and thank you to Mr. Ferencich, Mr. Hahn, and Mr. Dupuis. Wonderful presentations. I'm going to ream them off. 3 quick questions. The first one is about enhancements to CEBA. You've spoken about, possibly seeing an increase to the forgivable portion of CEBA being one enhancement that would be very helpful. Also, the fix on the eligibility criteria that have been mentioned. Are there other ideas you have on improving CEBA for the current stage that we are in, and also how it might need to be adapted to future stages as we move through this unknown territory that we're in? So that's my first question. My second question is wondering whether you have had any encounters, any of you, with the social enterprise sector, and what those encounters have been, and whether any of the tools that you have been able to respond to the needs of the social enterprise sector. And following on that, my final question is about the very smallest micro business sector, and whether you're able to, through the tools that you've described today or others, meet the needs of the micro business sector, particularly those who may have been relatively new startups from new Canadians. So those are my questions, and whoever would like to take a stab at them, I would appreciate it. Thank you.
Thank you. Do you want to start, Mr. Ferencich?
Yes, I'll keep my video off to try to protect my audio, so apologies for that. So let's start with the first one, the CEBA enhancement. So we are in the process right now with working with the Ministry of Finance on the increased enhancements to eligibility for CEBA. So originally CEBA was provided based upon a payroll. 20,000 actually started off at 50,000 to $1 million, and then it was lowered to 20,000 to and then the range was expanded to 20,000 to 1.5 million. And that what we found out is that there were a lot of companies who paid themselves through dividends or used mostly contract employees who didn't have a payroll that were not eligible for CEBA. So this new version of CEBA that will be launched soon will deal with non-deferrable expenses. So your eligibility will be determined based upon the expenses that you incur. So that should increase the eligibility there. As it relates to the forgivable amount, in my opening comments, I did say that our internal polling does suggest that the number one reason why people are not applying for or not getting CEBA is not necessarily eligibility, although that's an issue. It's that they don't want to apply for it. And as I think all the speakers have said here, the businesses in Canada, especially small businesses, are very, very concerned about taking on additional debt at this point in time. It is a very uncertain environment. We're not sure when we're going to be reopened, not sure what kind of clients will return to the business after things are opened. Not sure what other restrictions are going to happen, not sure if there's going to be a second wave. So all these things just make it a very difficult time to take on additional debt and make commitments to repaying the debt. One of the things I've said is that even 25% forgiveness is not much of a help if you don't know how you can repay the other 75% that you still have to pay. So these are the challenges, and so I think if there was a willingness on the part of the government to increase the amount of the forgivable loan, I do believe that would increase the amount of businesses that were comfortable taking the CEBA. On the second question on the social enterprise sector, I personally, don't. I'm sure the Royal Bank has some experience there, but we have been providing our what we call our client treatment plan. I talked about that. That was an across-the-board support for all businesses from all sectors. So those businesses in the social enterprise sector would have been able to, take advantage of those just as any other sector. Although I don't have specific case points to point to. And then the last on the micro business, I think the micro business, I think, are the ones that are most concerned about taking on that additional debt right now. But the other point I would make is that the CEBA at $40,000 is actually a significant sum for the micro business world. If you only have $20,000 of payroll, a $40,000 loan is actually quite significant. If you have a $1.5 million of payroll, I mean, the 40,000 is not won't go as far. So I do think the CEBA is serves well the micro business. And again, I'll say to my comments that the RBC was there to support all of our clients, and in particular the small business client, the micro business client, and offering them deferrals, increased liquidity, and support on their corporate cards, which Visa is, for the micro client, one of the first forms of credit that they get, and we have been able to provide additional support and lower interest rates on those products.
Thanks, Mr. Ferencich. Mr. Dupuis.
Yes, thank you so much. Actually, to piggyback on what my colleague was saying, we're not sure that enhancement to the CEBA program with an increased forgivable portion would really be of a use at this point. And I think you alluded to the fact that these payments still need to be made. I think it was a very good measure to start with. As I said earlier, there was a crisis to adapt quickly, and I think these measures were really there at the right time, at the right amount, at the right level. Going forward, there might need some other requirements or some needs. So I don't think there's that many things that can be done going forward, because they will still have to reimburse them. So this is the position. We haven't really have issues in terms of eligibility criteria, except for the fact that when you deal with a personal account, we should be able to move them to a business account in order to alleviate that issue. But that's a very small amount of problems here. As far as social businesses sectors, I've alluded to the fact earlier on that the Caisse Solidaire, which was one of the caisses that Desjardins has put forth an amount of $1 million to help finance activities and counseling and advices to those businesses that are going through tough times. One has to keep in mind that most of those businesses, a lot of those businesses, I should say most, but a lot of those businesses have very few permanent employees. They don't really have all the structure that a larger organization would have. So they lack knowledge of marketing or finance, in that kind of situation. In general terms, they're very good, but when you face a situation that nobody else has ever seen, you might need some additional support besides money, which is basically what we're trying to do with the fund that we've put together. And right now, we are using that fund to provide, as I said, support and advices. So, and so that would be one way to help those businesses. We do know that these represents a fairly large amount of people employed in Canada, and I think it's quite important that we make sure that we support them. As far as micro businesses or startups, as we say, one thing we need to keep in mind is that sometimes it's not so much the money that they need at the beginning, but it's more like support. Why? Because people will go with the TLC type of money. They will go with the money of their family and their friends and so on and so forth. But what they will need more is, again, counseling and support and help, because their idea need to be structured. They need to have a strategic plan. They need to have a marketing plan. They need to have financial structure. And the needs of money is not as important. It is, but it's not as important or as important as the other things I mentioned. So I think it's a combination of both money and support. A lot of people have asked for the money, and I think through the 360,000 people that we have in our portfolio, many of them were single employed businesses or startups, and we've helped them. But we also find out that the more you support them in the upstream, the better they come when they come downstream. Thank you.
Thank you. Mr. Hahn?
Sure, thank you. So with respect to enhancements to CEBA, certainly I think there's a desire. It's a blanket program right now. We think there is an opportunity to tailor the program, increase the threshold as well as the forgivable portion. And as I alluded to, there are some sectors that have been disproportionately hard hit where the current ceiling really is not of consequence with respect to their ability to survive this pandemic over the next 12 to 24 months. For social enterprise sectors, certainly we have a variety of measures that are being provided by our members here in British Columbia. Van City recently has provided significant grants to the Vancouver Foundation, as well as another number of other nonprofits. Community Savings here in British Columbia, which has approximately 40% of the labor union market. Labor unions don't qualify for the CEBA loan, and they're issuing a similar product for distressed labor unions here in the province of British Columbia. With the micro biz, I would also agree with the previous speaker. Certainly, I think advisory services are critical. I know Small Business BC here has been working, has a COVID-19 response team, helping small businesses adjust to some of the structural changes as well as consumer behavior, and looking at how they can pivot. Van City and Blue Shore Financial are offering what we call pivot loans, interest-free loans to help these small businesses adjust their business or operating model. And certainly, many or all of our members have also provided a number of other measures aimed at micro businesses, extending lines of credit up to $2,500 or $5,000 interest-free for a significant duration as well. So I'll leave it at that.
Thank you very much.
Thanks, Mr. Hahn, and thanks, Senator Coyle, for your question. I like the idea of pivot loans because the world's not going to be the same as we emerge from this, that's for sure. Senator Faure-Nising, followed by Senator Ringett.
Thank you, Senator Deacon, and thank you to our host senators and to the panelists for being with us. My question is for Mr. Ferencich or any of the other panelists who want to chime in. So it relates to the purpose of CEBA, which is clearly to provide emergency access to capital to help with non-deferrable capital and or operating expenses. But need is not one of the eligibility requirements. And my concern revolves around the possibility that some small businesses who have a healthy bank balance and do not really require the loan access it for the sole purpose of taking advantage of the $10,000 forgivable portion and whatever that will be increased to in the expansion. Should this be discouraged in your view, having regard to the fact that if they meet the eligibility requirement and they satisfy the ultimate government audit by demonstrating that the funds were actually used for rent, used for payroll, as is required. So I'm interested in your views on that.
Thank you for the questions. So, I mean, what I will do is take you back to late March, early April, when we started to have discussions with the Ministry of Finance between us and Royal and the other financial institutions on how we were going to help and how serious this crisis was going to be. And that decision had to be made between speed or you know, what we'll call an adjudication, because I do take your point that a program that's open to everyone may have someone who you know, just applies, pays off the loan and gets $10,000 for free. I mean, that was possible, but again, it was a decision, you know, by the government to say that the crisis is such an extent, it's so widespread that we can't do an adjudication of every loan. I mean, that because that's what would have you know, prevented that by making sure that there could have been a full accounting of the you know, need and resources of businesses, but just the scale. I mean, as you heard, we've done 600,000 CEBA loans. Our RBC alone has done over 150,000. it would have taken months to roll out and then execute a program where there was that level of oversight and adjudication. So the decision was made, and again, that's a government decision, that speed was more important. And in order to get this program up, and just so everybody knows, we went from nothing to a fully functional program in 13 days. It required us and the government to make certain decisions, and one of them was that we couldn't adjudicate every single program. There's just not enough capacity, even in the very massive distribution networks of the big six banks of Canada, to deal with that many all at once. So again, on the first day of CEBA, RBC processed 25,000 loans. It would have been impossible to adjudicate those individually. So all that to say that there was a trade-off to be made of speed versus oversight, and now that doesn't mean that there is no review going on. So the EDC is reviewing the information that has been provided after the fact. There will be consequences for those who have abused the system or didn't meet the qualifications. We did try to minimize the amount of improper use by making sure the account was open, but at March 1st, so before COVID. So you couldn't just open an account and say, try to get the money. A big, not using personal accounts. And this is one of the reasons why personal accounts are not eligible for CEBA. And I know it's been a big problem, but we can't verify a business that is operating through a personal account. The banks do not, encourage that, although it does happen, especially on the micro side. But, one of the concepts we wanted to make sure we did was that the KYC, know your client, and the AML checks were done. And the only way to ensure that was done is if you had an existing business account. And that way, each one of the financial institutions would have done your anti-money laundering and KYC requirements. So that's why personal accounts aren't allowed. So there was, and I won't take up a whole bunch of time going through all the different various stages of checks that we put in place or requirements to try to minimize the misuse of the program, because there were quite a few built in, but certainly we could not have adjudicated every single loan on a needs basis and done it in a timely manner.
Thanks, Mr. Ferencich. Mr. Dupuis, and followed by Mr. Hahn, if you've got comments as well.
Oui, merci beaucoup, Madame la sénatrice. J'ai beaucoup apprécié votre question, considérant que c'est un sujet très délicat et en même temps, l'objectif visé par cette question définitivement à aider les entreprises de façon très générale, un peu comme l'expliquait mon collègue. Je pense qu'on doit, puis pour renchérir sur ce que j'avais mentionné un peu plus tôt, on doit se poser la question sur l'utilisation des sommes, mais je confirme aussi que nous avons aussi eu à déployer très, très rapidement les sommes. On a déployé un système d'automatisation des processus en fonction des critères qui avaient été établis de façon à répondre très rapidement à ces besoins-là. La question qui se pose maintenant, c'est est-ce que ces sommes-là sont utilisées de façon adéquate? C'est très, très, très difficile. Par contre, je veux quand même vous amener sur un volet qui va nous aider, nous, chez Desjardins, à tout le moins. On a préparé un questionnaire auprès de presque la totalité de nos entrepreneurs et dans lequel questionnaire, on leur pose des questions sur l'ensemble de leurs activités et comment ils considèrent leur situation très précaire, très facile, très bien ou au contraire qui ont des enjeux. Et on veut, à partir de ce questionnaire-là, identifier la façon dont on peut les aider. Mais évidemment, derrière ça, ça nous sert aussi à comprendre la posture dont les entreprises avaient utilisé, dans laquelle ils étaient lors de la demande de l'argent et faire des parallèles avec les réponses qu'on leur a données. Je ne pense pas qu'on sera en mesure de trouver une solution à cette question-là très facilement, mais au moins, on va être en mesure de bien comprendre la posture de nos entrepreneurs.
Merci. Mr. Hahn?
Nothing further from me on this point.
Thank you very much. Senator Ringette.
Thank you. First of all, thank you for this occasion to ask questions, and thank you for your presentation. And when I look at this 40 $40,000, $10,000 forgivable, 3 years, 5%. At the end of the day, in this particular scenario, the small business will be paying out $6,000 in interest for the 40,000. So the banks make $6,000, and the small business may get at the end of the day 4,000 in reprieve for that 40. That being said, like there's something wrong with this scenario in my book. That being said, my question to you is, how do this CEBA program for SME compare with similar or other kind of programs for SME that's been put in place in the other G7 countries for this crisis situation?
Thank you, Senator, for the question. And I want to make this point, because I think it's an important point. That interest is not going to the banks. All the banks have agreed to implement the CEBA as a cost recovery basis only. That interest, if payable, will be returned to the EDC. So the banks make nothing on the CEBA loan, nothing except cost recovery. So, and the terms of the CEBA were determined by the EDC and the Ministry of Finance, not by any of the banks. So again, it's a very important point that I want to make sure that all the senators here have. The banks do not receive any of that money for interest that is payable after 2 years. Now, I think, sorry, go ahead.
Excuse me. So at the end of the day, what you're saying is that it's the final cost of this program per business for EDC is $4,000, not 10.
Well, that's if someone goes right to the end of the 5 years. So the way the numbers work is that if you there's no interest for the first 3 years. If you repay it before that period of time, that's you could repay it actually, any time, very shortly, and not pay any interest at all. So I think, unless a company is going to be in trouble, the economic incentive is to repay this loan prior to getting to the interest period of time. So I think by the time you get into the paying interest, it's probably because that business is in trouble and they can't pay it back. You are economically incentivized as a business owner to pay it back before you pay even 1 cent of interest, if you can do that.
Okay, thank you very much.
Okay. Sorry, I've gone on. So anyway, so the banks aren't making a lot of that interest as it relates to the other countries. That was the other question. So I can't speak to everyone in the G7. I do know the US program was a completely forgivable program. There was a dollar cap on it, which led to a mad dash. If you've watched any of the news programs of everyone trying to apply before the money was gone, not quite a great experience for the business owners. But there was a higher proponent of forgivable loans. Now, you have to look at that in context. They didn't have the same suite of products as the Canadian government decided to put out. So, but if it just relates to the loans to the businesses, there was a higher degree of grants associated with this.
Thank you, Mr. Dupuis, followed by Mr. Hahn. Any comments?
I think my colleague did most of the issues were resolved, and I don't have anything else to add. Thank you.
Thank you. Then nothing from you?
No.
Thanks, Mr. Hahn. Okay, if we could, Senator Marty Deacon, you've got a question, followed by Senator Wetston with he'll be a cleanup hitter.
Thank you, and thank you everybody for being here today. I'm hoping you can hear me. I had a chance, I'm listening to everything said today and so appreciative of your perspectives, and following up from a meeting with a number of small businesses last evening. And we looked at different pieces, lending, where they're feeling, what their biggest worries are, what's keeping them awake at night. And there were three focuses really that resonated strongly. Was that a lost generation of small business owners is a very real reality for them. The concern about, yes, applying and not applying for some of these opportunities, whether they've done the right thing or the wrong thing from their business perspective and business plan point of view, and the complications around some of the loans and grants that haven't been maximized, government grants also. And the third is, we're just scratching the surface of this, but we are actually, as small business owners, we're worried now, we're concerned now, we're doing what we can now, but in 12 or 24 months or 18 months, that's where we are really, really frightened and concerned of supports that we don't even know yet or anticipate yet we're going to need. So my question today, if you don't mind, is looking down the road to that 12-month point, that 18-month point, any perspective on your thinking, your planning, your anticipation from your perspectives, given that was and continues to be quite a concern for many. Thank you.
I don't want to monopolize. I'll let my colleagues. I'm happy to answer, but I'll give an opportunity to for the other presenters to jump in.
Perhaps, Mr. Hahn, we can start with you, and then we'll go with Mr. Dupuis and Mr. Ferencich. Thank you.
Sure. So certainly, yes, it's a concern for our members. It's a concern for the small business community, as I alluded to. I think there are some sectors that are able to adjust their business models. Retail trade, when we look at CEBA applications by category here in amongst our credit unions, hospitality and tourism was the number one sector, closely followed by retail trade and then construction. Retail trade, certainly, a lot of our credit unions are working with them on building out a digital presence. As I said, there's some of these pivot loans to help them move into that forum. But there are other sectors that aren't able to benefit from a transition that they have a bricks and mortar like hotels or oil and gas services up in the Northeast that will struggle. And certainly it is a challenge. I'm on a call with our chief risk officers of our top 5 credit unions here in British Columbia, and really modeling out the conversion from deferrals into delinquencies. Our credit unions are holding more liquidity than at any other point in time for loan loss provisions. But I think the challenge certainly is it's very opaque. I don't think anyone really knows what the balance of this year will hold for many of our sectors. But certainly the goal is to get through the next 12 months. And as I said, I think specifically, I think it's having a better understanding, working with the various associations of the sectors that we understand are going to be highly impacted, and developing tailored specific financing solutions and supports from government to ensure that those sectors can continue on over the pandemic period. So I'll leave my comments there.
Thank you, Mr. Dupuis.
Yes, thank you so much. This is a really, really interesting question, and I'm kind of worried to answer that in a structured manner, because it's very, what's unclear right now is what's going to happen in the next couple of months. Well, we don't know whether the vaccine will be in place, whether the confinement will stay on. So there's a lot of issues that are arising, but we don't have the answers yet. The one thing we do know, though, is that some businesses, some sectors are affected more, as Mr. Hahn has alluded to earlier, whether it's hotel, restaurant, tourism, nonprofit, actually, as we were talking about earlier, are going to be quite greatly affected. The business transfers, as I was saying also earlier, also is going to be an issue, because some people will have to make a decision right now whether they want to transfer their business right now at the potential loss, or maybe wait another 3-4 years until the things go back to the normal, which again we don't know yet. So I think the best position right now, which is the one thing I did talk, actually a couple of weeks ago, I sent an email to many of my entrepreneurs that I used to be dealing with. And all of them, first of all, called me back. They said, please call me and I want to talk to you about what's going on. So the first thing is, as I said earlier, make sure you listen to those people, talk to them directly. And one of the things that I asked them is that, how do you feel right now Well, a lot of people said they are insecure. They insecure. I mean, they feel that the pressure's there. I said, okay, but what is your situation currently? Well, some said they had some issues. Some said that they have they're well positioned. And I said, okay, now what prevents you from taking charge of the situation and really embracing the change and really push forward rapidly what's going to happen? What we've done to help those, one of the things that you have heard about is online commerce. E-commerce has grown rapidly. One of the company that I was coaching was telling me that they were they're selling docks for ponds, and they were not. They were just waiting to see how the summer was going to go, and they were not a non-essential business. So they were saying, well, what are we going to do? I said, well, maybe it's the right time to diversify your activities. Maybe it's the right time to plan your strategic diversification. And they said, well, how are you going to react? You being the bank? I said, well, listen, if you have a plan and you have the right attitude, come to see us. And this is what people have said I've done. So my answer is that I think it's going to be very unclear, but not doing anything is not the answer. And I think we should be able to support those activities.
Thank you very much, Mr. Dupuis. Mr. Ferencich, we're almost out of time. I'm wondering if you have something quick to add, or
Well, yeah, all I would just say is that I agree with the senator that the small, and I said at the very beginning, the small business, I think, are the ones going to be the most challenged and the ones that are impacted the most by COVID, and we need to provide support and assistance. And I know at RBC we're trying to do that, looking forward in time, and which is why I have been advocating not only to this group but also to the Ministry of Finance about a greater proportion of forgivable loans in the CEBA. I think that.
Thank you very much to each of our speakers. Thank you, Mr. Ferencich. Thank you, Mr. Dupuis and Mr. Hahn, and to all of my colleagues for coming out to this virtual session. I had a list of questions that I was hoping to get to, but the engagement was so high that I get bumped off the list. So thanks to everybody. And there's Mike. How are you?
It's been an enjoyable morning. I just want to say thank you to you for organizing it and to our guests, because it's all part of the learning process and we're all in touch with all kinds of small business. And this is very helpful for us to know, to be able to report back to our constituents that in fact, their concerns are being heard by people at the very top. So thank you again.
Thanks, Mike. Folks, I'd just like to make you aware of the session that we're having next Monday, and you'll be receiving a formal invite to it. We're looking at the barriers and opportunities related to how do we reignite small business growth. There's some sectors that are going to have the most difficult of times, there's no question, but there are other sectors that can be really engaging in new growth. What are the opportunities for us, and particularly in non-debt options, to help reignite growth where possible in the small business sector of our economy. So that's what we're going to be looking at next Monday, and I really hope that you'll be able to join us then. And again, thank you very much to our guests, and really as well to those who made this session happen, Senator Wetston and Senator Moncion. Fantastic and grateful all around. So thanks for joining in, everybody.
Thank you for the invitation.
Thanks. Bye-bye.
Thank you also, Colin, for the great work you've done, because you're part of this trio. Very much a big part of our trio. Thank you.
Thanks. Bye-bye.